Hey, what's going on, guys? It's your boy Tim Aslan here with another crypto update. I hope you all have been well. Guys, the market has been going sideways, and I didn't feel like I had to make a YouTube video because literally we've been chopping for the last 3 weeks. But I think it's time for a quick update. I posted some charts on Twitter the last few weeks, so make sure you guys are following there for the latest updates. But as you can see, the yearly open has been our most difficult resistance zone all the way since back in mid-November. So I'm just going to walk you through some of the price action since my previous video so we can understand what happened, and then we can kind of think about what's coming ahead. So as you can see, obviously we had this big dump. Initially, we held this area right here, which was the yearly open. Then we lost it. And you can see here, this was the most important area on November 18th. We actually retested the yearly open and rejected very, very hard. Came down again, retested again, and came down. And ever since then, we've been trading below it and just going sideways. So I think this yearly open is the most important thing that you can have on your chart right now because it will dictate if we go up or down. So as you can see, we had another nice pump off the lows, came down again, retested the golden pocket. This was a quite nice trade that I took right here. Swept this liquidity as well. Pumped up again, and you can see initially dumped right on the early open again. Tried one more time. I thought we had it for a second there, guys. We held above it for a second, but then turned into a wick and came down. So you can see how many times that this yearly open has really acted as a strong resistance. And yeah, now we're hovering below it. We have our December monthly open as well. That's very important. You guys mark out. And we're below that currently. So yeah, I mean, we're literally just going sideways. I'm going to pull some volume to show you the volume of this range that we're in right now. So we can pull that. You can see we just rejected from the point of control. So look how perfect that rejection is from it. So we're hovering below the monthly open. We're hovering below the point of control. If we want to be bullish, we really need to get above these two things as soon as possible and above the yearly open, which we just have not been able to do. Something hopeful, though, was you can see on Sunday, we actually held this 618 from this low to this high. And that was quite nice, actually. Really strong bounce into the point of control, got sold down a bit, came back above, and then now hovering below. So it's too early to tell. However, you can see that in this area right here, we have this sort of triangular formation right there. Something like this, right? It's where we're getting tighter and tighter as we get closer to the midpoint of the triangle. And there's a ton of key levels within this area, right? So I think whichever way this triangle breaks will be the trend for the end of the year. Typically, what we've seen for triangles like this is we can get a fake out to the downside and then pump up. That's the most common. Usually, the first way we break is not the way that price will go long term, or at least in the medium term of this trend. Now, what's pretty interesting is tomorrow is the FOMC meeting where I think it's a 95% probability that rates will be cut by 0.25%. So it does seem like we will get a catalyst to have this market move. I think everyone expects the rates to be cut, so we might get an initial pump or dump off that news. But then 30 minutes after the rate cut is announced, Jerome Powell will start talking about the outlook, the economic outlook. And so, depending on his tone, that can pump or dump us as well. But ideally, we can get a move up above this yearly open, retest it, and continue to the upside. That would be the most ideal scenario. Now, if that is the case, the thing that we need to look out for is this very, very large point of control at 104,780. The way I pulled that was all the way from this large range at the beginning. And so I do think if we can flip the yearly open, that will be the next resistance zone. Not to mention that that entire area is one that constantly has acted as support and resistance. So if we do get there, I do expect a rejection, at least in the short term of arriving to there. But I think if we are able to flip that as well, we can start looking at all-time highs. But I do think if our downtrend continues, it does still make sense to retest this area before heading lower. Now, if we break this triangle to the downside first, and we are going to head to some new lows, then in that case, I would look for a sweep of this low down here at 75,000. Ideally, what I could see is a quick wick down into this area and then candle close above it. I think that would be just spectacular. This black line down here is the 2021 all-time high from this chart. And, structurally, when you zoom out, it does look like a really nice bottoming area. So if we do somehow drop, another 15 to 20K from this area, this is where I would look to heavily buy or heavily have bids. And just keep in mind, guys, always prepare. If we do get to this area, expect a lot of bad news, expect a lot of FUD. Don't let that shake you out. That would be the time to buy. Now you can also see while I'm on the zoomed out view that we have the value area low, this white line right here, and it almost matches perfectly with the monthly open. But as long as we are below that area, it is a little bit bearish as well, because just a refresher of how this works. Between the value area high and the value area low is 2/3 of all the volume in this range. So if we are below that area, it shows that, this middle point area is very, very strong volume. And it usually takes a lot of effort and price discovery and volume to get back into that zone. So as long as we're below it, it shows that there's not enough buyers to match what was in this area. And usually we continue below it. Hey guys, real quick, two exciting updates. I have created a Telegram group for our channel. And in this group, I will be sharing much more up-to-date charts, intraday trading, as well as trade setups. So the cost for that is completely free. It's sponsored by BitUnex, and all you have to do is create an account with BitUnex using the link in the description and deposit at least 100 USDT. And then all you do is you click the Telegram bot link, you verify your user ID, and it will add you to the channel automatically. That's it, completely free. Just you have to create an account with BitUnex, which is an amazing exchange. It has no KYC trading with over 125x leverage on hundreds of pairs. And it's a great exchange, really easy to use. Next, BitUnex is giving away an amazing deposit bonus campaign. So it's the perfect time to deposit regardless and create a new account with them. How it works is if you deposit 2,000 USDT or one of these other numbers, you get a 200 USDT trading bonus. If you trade $200,000 of volume, you get an additional 200 USDT, which adds up to 400 USDT of free money that you can trade with, and all profits are yours to keep or withdraw. Basically, this 200,000 USDT sounds like a lot, but it is leveraged volume. So if you're trading 500 USDT at 10x leverage, that's $5,000 of volume. If you take multiple trades throughout the month, you should easily be hitting this amount. Lastly, they've created a new type of campaign that rewards whale traders. So if you're trading a higher amount, if you're trading over a million USDT of volume within this period, you'll get an additional 50 USDT. If you continue trading, an additional 5 million USDT of volume, you get an additional 500 USDT. So it really adds up quick. These numbers look high, but if you're taking lots of trades with, decent leverage size, always manage your risk, by the way, then you'll hit these numbers and you'll get free funds to trade with. And that's just one of the many things BitUnex does to reward, higher volume whale traders. So if you need any help with any of this, feel free to DM me on X, and let's get back right into the video. So yeah, guys, just to sum it up, we want to get a pump back above this area, above the yearly open to retest 104. If we go down, look for a triangle fake out to then go up above the yearly open. And if we significantly go down, look for around 74 to 70K for a strong, strong bottom area. Anyways, guys, make sure you use the link below to sign up to BitUnex. I'll see you all in the next video.